sponsored by the Securities and Exchange Commission of Nigeria.
Welcome to Eye on Nigeria's capital market. This is one of several road projects in the country's capital, Abuja. It's projects like these that the bond market has become a viable source of funding for. And in this episode, we take a look at how government and, of course, corporates are taking advantage of the development in the bond market and getting that much needed financing to support infrastructure development and, of course, capital expansion.
Well, very, very fundamentally, it's apparent that there is a need for external financing, and quite clearly, what is available, to either the government at the sovereign level or subnationals or even corporates, to a lesser extent, is the debt markets. Unlike corporates, government and subnationals don't have the opportunity, to go and raise equity or quasi-equity. So the options they have are very, very limited.
If we look at the states, for instance, there is a very good argument for a state government to look at the bond market. No matter how much money you're raising, the development needs are so much that being able to raise long-term capital to match some of those long-term assets is critical. But going beyond that, going to the bond market also introduces a level of discipline and standards, even in the way you manage your financial affairs and the way you report your financial affairs, that is also good for the states.
The gains that we get from finishing a project in 2 years rather than doing the project over a 5 or 6 or 7 year period. So for the state government and even the federal government, the bond market puts them in a position to better plan in delivering projects that will accelerate development of infrastructure projects that will also create a more enabling environment for the private sector to participate in a number of these states.
The first bond recorded in Nigeria was issued in 1946. However, by the early 1990s, the stock market had become dominated by equities amid waning appetite for bonds. Stakeholders recognized the need for a thriving fixed income market and embarked on a campaign to resuscitate the bond market. This led to a string of reforms that really gathered pace in the year 2000.
A market-wide committee was set up, for the reactivation of the bond market in Nigeria. And it was very, very successful. A lot of solutions were proffered, which the then minister accepted. And in accepting, I think part of the recommendation was that a dedicated body or a dedicated office should be established, to handle the federal government bond. And that was what brought about the establishment of the DMO, that is partly responsible today for the issuance of the federal government bond.
Before 2003, the bond market had been, if you like, comatose for more than 18 years. In 2003, the DMO, working in collaboration with other agencies, SEC, CBN, Ministry of Finance, and of course the capital market operators, decided to resuscitate the market. 2005, we now decided to issue bonds on a regular monthly basis. And that means we have issuance programs that covers the whole year, but most of the time are specific for particular quarters. So you could say since July 2005, we've been issuing bonds on a regular monthly basis.
Since its reform, the bond market has made, and indeed is still making, significant contributions to the way government does business.
I think has been extremely instrumental to the Nigerian economy and the development. And even you look at simple things that have been done. For instance, when they had the pensions that were not paid for years, that was funded using the bond market, for instance. You've had things like budget deficits now that in those days were very difficult for the government to fund. Again, that's now very easy to fund. The government's ability to make good of its guarantees, for instance, is now a lot much easier because it can now fund its guarantees.
But you also expect AMCON to be, a sizable issuer, because clearly we're getting to that point where the recapitalization of some of the banks will be completed, and AMCON is an integral part in filling the negative NAV hole in those institutions.
In the process, a secondary market has emerged. A 20-year yield curve for pricing of other bonds has been established, paving the way for subnationals and other issuers to raise long-term capital in the bond market. One such issuer is the Rivers State government, which recently announced a 250 billion naira bond issuance program.
The state is going to the market pretty much because it does have an ambitious infrastructure finance program, and one of those, of course, is the so-called audacious Greater Port Harcourt Master Plan, which is an internationally standard plan that was developed to transform both the existing city, Port Harcourt city, and then expand the limits of the current city towards the virgin areas. That plan, of course, requires quite a bit of funding. It requires a significant amount of resources. So part of the bond process would go into helping to drive that investment program. And of course, we do have other areas we're looking at, highways, M10 highway that will link the current city to the new city area. Then we'll have the monorail project, which also would be a major mass transit program that we're looking to fund.
Like Rivers State, several other states are looking to use the proceeds of bond issues to address similar infrastructure needs in a bid to attract additional investment into the local economies.
If you do a causal analysis of the content of the projects, most of them are developmental projects. Roads, schools, some hospitals. They are mostly supposed to instigate the private sector to make investments and for their states to be more attractive investment destinations for investors who are going to be looking at the states. I think that's what most of the states are doing for now. Maybe in another 5 years, when they will have achieved some level of minimum threshold, they can start looking at partnering with the private sector in doing PPPs.
Corporate issuers are not left out in the resurgence of the bond market. Issuers include large corporates and SMEs such as C&I Leasing. This NSE-listed company is contemplating a bond issue in the third quarter of this year.
Well, the bond for us is an option because the equity market is not exactly very vibrant right now. And in a bid to raise funds, that's the only way to go. Our preference would have been to raise equity, which is what we were trying to do before the market collapsed. So that's why we're in the bond market right now. It gives us that opportunity to refinance at a lower price, one, and gives us long-tenor funds. Yeah, so rather than go after 2-year funding, which you have to then try and refinance over time, you have 5 years, and you can actually plan your growth or plan your business around that.
The new management of the Nigerian Stock Exchange recognizes the growing importance of the bond market and has therefore initiated internal reforms designed to reposition the bourse for the wave of change.
We need to position ourselves as a retail market and that is complementary to the OTC institutional fixed income trading platform that they have there. I'm in the process of hiring a bond product manager that would help us in developing a market structure that works, appropriate pricing, the rules, the trading rules and the rules and regulations around a bond trading platform. And then as part of that market structure, we're going to be considering whether we need market makers or not. And we're also going to be looking to make sure that we extend securities lending on the bond side as well. We believe that if we structure it properly and if we get the right skill set of traders trading bonds, we can create a viable secondary market here on our trading floor.
Given its potential, regulators in Nigeria are pushing through reforms designed to support the growth of the bond market.
In most developed countries, the fixed income market is much larger than the equities market. So our expectation, given the huge needs in terms of long-term funding in Nigeria, is that it's clearly going to move in that direction. More generally for the Nigerian capital markets, it is an opportunity for us to broaden the product offerings for investors, because as I've said previously, a market flourishes because it's able to meet the needs of investors. But more importantly, bond issues, fixed income transactions lend itself to addressing our huge infrastructure challenges, whether it be power, roads, or other areas, whether it be at the federal government level or at the state government level. We've got about 36 states across the nation, and each of them is interested in contributing to addressing the infrastructure challenges. But just even as an asset class for pension funds or for insurance companies, it clearly is something that will be beneficial. The President of Nigeria, President Goodluck Ebele Jonathan, last year in 2010 approved a waiver which enables today state governments, corporates to raise bonds at 300 basis points cheaper than they used to raise it, and removes the discrimination that was against them and in favor of the federal government. Similarly, this year, the central bank removed the requirement that foreign investors had to hold investments in bonds for longer than 1 year before they could get rid of them. So that should enhance the liquidity of that market. And we're focusing on market makers, primary market dealers, and developing the liquidity in fixed income markets. Even more significant is the work we're doing with rating agencies to try and enhance the quality of the rating of fixed income transactions, because it is very important given its role in enhancing governance, whether at the state levels or whether at the corporate level.
We also have a rule for operators on shelf filing, what we call shelf filing or shelf prospectus, where all of the information about any corporate that is coming to the market, is put in a document. We review it and ensure that everything is right, and then you now put it like literally on a shelf. With this enables companies to come to the market at a very short notice and at a very reduced cost. We also have the issue of book building, a situation where you just don't come to the market and then you have the price and the volume. The operators go and meet the investors, and in the process they find out how much will this offer that they're going to be bringing to the market will be worth, after they have done their own due diligence and everything. So that prevents them coming to the market and putting a price, a preconceived price that may not be attractive to the investors, and also prevent the failure of these offers. If you come to the market as a state and say that you want to refinance some of your project by, paying off the bank loans, the SEC, first of all, has to go to the site to look at all the projects that you have in your prospectus. We have to make sure that the projects are in place, that you don't just, put something on paper, whereas there's nothing there. We are Nigerians. The SEC and also some other market operators and other stakeholders have decided that henceforth there are going to be a lot of road shows, a lot of investor education.
As the SEC takes the gospel of bonds across Nigeria, there is little doubt that this asset class will be critical to the repositioning of Nigeria as a leading economy on the African continent.